Hi, this is Peter Schiff. It's Wednesday, July 1st, 2009. Well, again, the dollar had a weak day in the market today. The dollar index back below the 80 handle. I know intraday the cash dollar index was below 79.50. Commodities in general were very strong, particularly energy and metals. Gold stocks had a very, very strong day. But still, we seem to be in a range, and I still believe that ultimately the dollar will break out of this range to the downside and commodities to the upside. Also, if you look at the stock market, the Dow Jones to me appears to be forming a head and shoulders top, although the neckline is around 8,200 on the Dow, and now we're around 8,500. So in order to actually complete the pattern, we would need to close below the neckline. And now it's a little bit too soon to tell in the short run whether the market's going to move to new highs or break down here. I think it can go either way. Long term, I think we're still in a bear market, but short run, maybe this correction is going to last a while longer, or maybe it's over. It's kind of hard to tell. Sometimes if you try to anticipate a head and shoulders top and you kind of get ahead of it, it can fool you and not actually complete the pattern. But it certainly looks like something we want to watch because it looks very suspicious that it could end up being a head and shoulders. Also, in the economy, I'm hearing a lot of talk about the fact that people think that maybe the emerging markets are going to, pull the U.S. out of the recession, right? That India, India and China and other parts of the world, if their economies pick up, that's somehow going to help the U.S. economy. And I just don't see that happening. I do believe that these foreign economies will pick up. I just don't see how it benefits the United States. Certainly the idea is that, well, if the Indians, if their economy grows, they're going to consume more, so they're going to buy more American products, and that's going to help the U.S. economy. Well, what American products are they going to buy? I think if the Indians start consuming more, they're far more likely to buy Chinese products. After all, those are the kind of products that we want to buy. Why should the Indians be any different? The reality is there are some American products that are going to be exported if the global economy recovers. Food, which is going to help the farmers, energy, which would help the oil and gas industry, but that doesn't help the overall U.S. economy. It certainly will help certain segments of the economy, but if food prices go up, if energy prices go up because the global economy is growing, that's not necessarily going to help the average American who has to buy food and buy energy. I think in general, the U.S. economy is going to be weakened by resurgent overseas economies because I think fundamentally our economy is that screwed up. What they're looking for is a revival of our consumer-based economy. But our consumers are broke. There is no way to revive that economy. It doesn't matter how much stimulus they provide. There are no more asset bubbles that are going to be inflated. The money that the Fed is creating is not going to go into making real estate prices go up. It's not going to make stocks go up. It's not going to create real wealth that Americans could lever up and spend. That money is just going to go into making consumer prices go up. It's going to lead to a rising cost of living, and that is not going to benefit the U.S. economy. Speaking about kind of nonsense views of the economy, I was watching on CNBC the other day Cramer's Mad Money. And I guess Mad Money is an appropriate title because you'd probably have to be mad to actually follow his advice. But according to Cramer, the housing market is bottomed. And because the housing market is bottomed, he's recommending financials, he's recommending the banks. I think one of the banks he recommended was Wells Fargo. Now, even more ridiculous than his call that the housing market had bottomed was why he thought it was bottomed, or why he thought the banks were good buys. Basically, he pointed out that a lot of the banks that have been foreclosing on real estate have not sold the real estate. They foreclosed, but they haven't put the houses up on the market because they didn't want to get a low price. So they've been warehousing all this property. They own it, but it's been off the market. Now, since he believes that the real estate market is turning around, he now believes that the banks are going to make profits on all this real estate that they own. Give me a break. How are they going to make profits? They have to sell to make a profit, and if they try to sell, the price is going to collapse. The fact that banks have been foolish enough to hold on in inventory all these houses is merely going to compound the downturn because this is all phantom inventory. All this inventory should have been on the market, but instead it's been temporarily held off the market. When the banks try to unload this property, not only are they not going to get this little bounce that we've seen in real estate, but they're going to sell at much lower levels. The banks are going to lose more money because they held on to these properties. They would have been better off blowing out of them while they had a chance. But they didn't want to acknowledge how bad the market was. They thought if they just hold it on and hoped that the market would come back. It's not going to come back. In fact, we're probably not going to see any kind of anywhere near a bottom in real estate until all these banks dump onto the market all the houses that they're holding in inventory, hoping the price goes up. And it's amazing that Kramer can't figure this out. In fact, we got some new news came out today on delinquencies. Delinquencies on prime loans. Prime loans, these are the best loans. In the last year have tripled. They've gone from about 1% of mortgages to 3%. That's a big move. Now, these are prime loans. These are the best loans. And if they're delinquent, look what's happening with the rest of the market. Also, there was a big increase in delinquency in insured mortgages. That's mortgages where an insurance company stands behind them, where somebody insured that there would be a payment, which means if the mortgage isn't paid, that triggers another liability. That's similar to the way AIG had to pay out on credit default swaps. So all the evidence is that the problems in the housing market are getting worse. How anybody can cling to the notion that the housing market has bottomed is crazy. In fact, look at the other news that we got today from Fannie and Freddie, that they're now going to be refinancing mortgages at 125% loan to value. And these are mortgages that under normal circumstances are unrefinanceable because who would refinance you when the house is worth 25% less than the money you're trying to borrow? But Freddie and Fannie said that they would do it. And obviously they wouldn't have to be doing this if the real estate market were picking up. I mean, the fact of the matter is they realize that these prices are not going to turn around, but they still want to try to help people refinance into lower cost mortgages, even if they don't have the equity to do it. And of course, from Fannie and Freddie's perspective, this is a negative for their balance sheet because what they're going to do is they're going to let people refinance a mortgage. Generally, they're probably going to go from a high cost mortgage to a much lower cost mortgage, even though the mortgage is very risky because you're talking about a high loan to value, or in fact, a loan that exceeds the value by 25%. But what they're doing is they're taking this now riskier mortgage that's on their books, but they're reducing the payment that is being made. So what they're doing is they're taking a risky asset but accepting a lower rate of return for holding it. That makes no sense from a financial perspective because now they're getting less money to compensate for the greater amount of risk. The only reason they can be foolish enough to do this is because they're now owned by the government. And since they're owned by the government, it doesn't matter if they make decisions that are financially unsound. Because if Freddie and Fannie lose a bunch of money, which they're obviously going to do refinancing these mortgages, it doesn't matter because the taxpayers are there to pick up the losses. This is kind of what I wrote about when I in my piece on healthcare. Whereas if the government has a health insurance plan that it provides, it'll be the same way. It's not going to matter if they price their health insurance at unrealistically low levels and actually lose money providing the insurance, because it doesn't matter, because they're going to get their money from the government to make up any of these losses. And of course, that's what they're doing here. Now, probably the next step, and they haven't done this yet, but my guess is that maybe they will, is the next thing Fannie and Freddie will do is say, we will refinance mortgages that are at 125% loan to value, even if that's not currently an FHA, a Fannie or Freddie insured mortgage. See, right now it only applies to mortgages that are already insured by Freddie and Fannie. So they're not taking on any additional risk. They're simply reducing the rate at which they're compensated for assuming that increased risk. But what they're not doing is saying, hey, if you have a loan that isn't right now on Fannie and Freddie's books, that will refinance you at 125%. But I think that's coming. I think that's one of the next things they're going to do, which is going to be an even bigger disaster, because that would amount to another bailout for the banks and other lenders who are now going to get 100 cents on the dollar for loans that are underwater, because Fannie and Freddie are willing to basically take those loans onto their own books and save the banks from the losses. Anyway, that's it for today. I'll be back again. Hopefully, I know I'm going out of town for a couple days. I'm going out to visit my father And so I might not be able to blog for the next couple of days, and then we have a holiday weekend. So if not, enjoy it, everyone. I'll be back again on Monday.